Middle East tensions have officially exploded, and every investor needs to ask one critical question. What happens to the markets when the opening bell rings tomorrow? The geopolitical situation has escalated sharply following fresh strikes by the United States and Israel on Iranian targets. Tehran has not stayed silent, issuing severe threats and launching retaliatory moves across the region. We are already seeing the immediate financial fallout. Regional markets, which operate on Sundays, have opened significantly weaker. This serves as an early warning sign as investors scramble to price in the very real risk of a wider, more prolonged war. To understand the current market fear, we must look at the core drivers of this instability. This is the boiling point of long-running hostility between Iran and Israel, compounded by deep disputes over Iran's nuclear program and a fierce competition for power in the region. The recent targeting of Iranian leadership and strategic sites has changed the calculus. The threat level is now critical, and the market's biggest nightmare is a disruption to key oil supply routes, specifically the vital Strait of Hormuz. Geopolitical risks of this magnitude do not just cause ripples, they cause waves. We typically see significant fluctuations across stock, bond, and currency markets, often triggering sharp downturns. When the geopolitical risk premium jumps, the reaction is almost mechanical. Global equity markets open lower. Traders immediately abandon risk assets like stocks and flee towards safer harbors to park their capital. So, what is the playbook for Monday? All eyes will be glued to the price of oil. Beyond that, expect heavy volume in defense stocks, while airline and shipping stocks may suffer due to rising fuel costs and potential logistical hurdles. Overall, risk sentiment will be incredibly fragile. If oil prices spike and fear takes over, major indices are likely to see a gap down open or extreme volatility. Oil prices have already surged, and analysts are sounding the alarm that Brent crude could hit $100 per barrel if the Strait of Hormuz faces significant disruption. In times of war and uncertainty, history repeats itself. Investors traditionally rush to safe haven assets. Gold and silver are expected to see a strong, possibly gap-up move as tensions remain high and money rotates aggressively out of equities and into precious metals. This trend could persist if the conflict escalates or spreads further. What is your prediction for tomorrow's market open? Are we looking at a big crash, a small dip, or a quick recovery? And if you found this video useful, don't forget to like, follow, and share this with a friend who watches the markets.